Over the past few months, we've seen some major shifts in the investment landscape of the Swiss life science ecosystem. So today, we are going to compare private and venture fundraising activity in Switzerland from January to May 2024 versus 2025 to see what has changed. Let us start with 2025. The first 5 months of the year have seen 19 deals in total compared to 25 in the same period last year. However, this year's funding rounds were notable for being substantially bigger. For example, the largest 3 deals of this year, 𝗦𝗪𝗜𝗏𝗧 $200 million Series A, 𝗦𝗖𝗜𝗙𝗘𝗡𝗖𝗘 $86 million Series A, and Granite Bio's $100 million Series B round all took place within the first half of this year. Other notable transactions included 𝗦𝗖𝗜𝗘𝗡𝗖𝗘, Therapeutics, which raised $65 million in a series of funding round, as well as 𝗦𝗪𝗜𝗡𝗙 Therapeutics AG, which secured $54.89 million in a Series C round. These larger deals were complemented by a handful of smaller rounds, including 𝗦𝗨𝗏 by Actia, which raised $42 million in a Series B round, as well as 𝗦𝗪𝗏𝗏 by Copy Egg and Virtual Labs and Curatopia, which raised $35 million, $8.72 million, to $0.98 million and $1.77 million respectively. Notably, several early-stage companies also secured modest venture or pre-seed funding, including 𝗦𝗪𝗏𝗏𝗏 and 𝗦𝗪𝗏 Therapeutics. Now let us look at 2024. The same period saw 25 deals with a higher number of Series C and D deals. The investment sizes were more evenly distributed, with 𝗦𝗏𝗏𝗏 leading the pack at $82.4 million, followed by Amazontis, Neurosterix and Arga Medtech SA, which raised $66, $63, and $58.52 million respectively in Series D, Series A, and Series B rounds. The remaining deals included transactions such as Memo Therapeutics AG, which raised $22.8 million, Stelligla, which raised $17.4 million, and Bioversus AG, which raised $13.57 million. Additionally, several seed and early-stage deals were present, including Allegria Therapeutics, Limitech Biologics AG, and Oreo Therapeutics, which raised $3.5 million, $3 million, and $0.55 million respectively. So what does this data tell us? There are 3 key takeaways. First, scale over quantity. 2025 is marked by a trend toward larger, more concentrated investments, particularly in Series A and B rounds. This indicates that investors are looking to place bigger bets on companies with strong fundamentals and high growth potential. Second, early stage remains active but selective. While pre-seed and seed rounds continue to happen, they account for a smaller share of capital deployed, suggesting that while investors remain interested in early-stage innovation, they are being more cautious and selective with their investments. Third, there is a shift in focus. The 2024 landscape was dominated by follow-on and later-stage rounds, whereas the 2025 funding environment appears more concentrated on supporting platform technologies and early-scale commercialization. In summary, the investment climate in 2025 signals a strategic reallocation of capital toward fewer but more substantial bets. Companies with scalable platforms and clear momentum are attracting the bulk of funding, highlighting a growing preference for ventures with immediate potential for impact and expansion. If you found this analysis helpful, please hit the like button and subscribe for more insights on the life science industry. Thank you for watching.